Welcome to a video that I like to call the deep dive video. This name might be a little bit misleading. Every weekend I put out 4 videos, a daily video, a weekly video, an intermarket analysis video, and then this video, which is kind of the leftovers. There's a lot of charts that I look at each week, especially for the daily videos. However, a lot of those charts I don't cover all the time. And so this video is designed to go back, look through all the charts that I used over the last week, and pick out the ones that I didn't talk about, and then I go ahead and include them in this particular video. If you watch all of my videos, this wraps everything together so that you have a pretty good exposure to what's happening in the market. This is being prepared for Monday, June 26th. The first chart is of the VIX. Now, you don't see the VIX on this chart. It's invisible. What we see is a 50-period exponential moving average, and this gives us the range of the VIX over a period of time. What you can see over on the right-hand side is we've been really dropping down with the VIX, and if we keep falling the way we have been, we might actually drop below this 20 level and possibly start a new range. Now, that could also signal that we're at the bottom of this range and getting ready to turn and go back up. This is just a good way for us to see on a dynamic basis the different changes in the VIX, where most of the time we also use static numbers, 12.5 for the downside, 20 to the upside. Well, the VIX doesn't always fit into those static numbers, so this gives us something that we can adjust to on a relative basis. Then we also look at the VIX, and then we do a ratio of the 3-month average of the VIX, and then I put a moving average on top of that, and you can see where both of these are going down, suggesting that there's not a lot of fear right now. Then when the VIX is acting kind of strange, I do a correlation of the S&P 500. We're not getting a reading from this right now. When this really spikes up and the VIX is acting kind of strange, that's when this can often tell us something. But since we're getting a pretty low reading right now, it's why I have not been using it. Then I also look at an RSI of the VIX to see when we've gone extreme positive or negative. I did show this not too long ago when we went extreme negative with the VIX, but right now we're not either positive or negative. This is the chart that tends to update at the very last, right before I get set to do each daily video, and sometimes it hasn't updated even then. This is a 1-day chart of the equity put call ratio. And think of this like you do the VIX. When it's going up higher, that means there's a lot of fear. That means that people are hedging their investments using put options because the number of puts is outnumbering the number of calls. When we go down, this ratio tends to go up. When we go up, this ratio tends to go down. Then we look at a 5-period simple moving average of that same equity put call ratio. And we've been going down overall, even though it did tick up over the last few days as we saw some weakness coming into the market. The chart that you typically see in the daily videos is a longer term version of this chart, where I have some different levels plotted on here, and sometimes we can use this for a signal. Then just to keep an eye on where we're at, since we were at the all-time high at the beginning of 2022, we're now down 9.76%. This is when we hit the all-time high, and this is where we're at right now. Then we also have spent a lot of time above and below the 4,000 level. We're quite a ways above it now. I just put up a chart with this line on here just to show that how many times that we've bounced up and down below that. Then we also look at the skew index. Now, for a while, we were following this pretty closely. When it gets up into this red area, they're expecting some kind of a big move. Now, the skew index is related to the VIX in that the VIX measures at the money options. The skew index looks at out of the money options, and when they're expecting some kind of a big move, the skew index really goes up. Now, does that mean we've hit a top or a bottom like we often use with the VIX? Well, if you look at other times when the skew index really spiked up, sometimes we just kept going in that same general direction. Sometimes this marked a bottom, sometimes this marked a top. So we kind of have to look at the context when this is generating some kind of a signal. We've been dropping back down more into a normal range, so that's why I have not been including it. StockCharts.com also comes out with predefined technical alerts. These are based on indexes, sectors, and different areas of the market. And we read this from the bottom up. This is just for Friday, even though they come out with alerts for every day. Right after the market opened, the real estate sector had a bearish MACD crossover. The NASDAQ crossed below 13.6, then 13.5. The financial sector had a MACD crossover. Energy also had a bullish percent index that dropped below 50. You kind of get the point here. When they're red, that means they're more negative. When they're blue or green, that's when they are more positive. Then we look at 5 different indexes: the Dow, the S&P, the NASDAQ 100, the mid caps, and the small caps. And then we can rank them on a score of 0 to 100. The higher the score, the better looking the chart. This week, coming in first place are the Qs at 98.3. Even though we had a little bit of a difficult week, this chart has still been holding up overall. In second place is the S&P 500, coming in at 88.5. In third place are the mid caps, which did see some improvement. They came in at 51.6. In fourth place is the Dow at 50.9. And in last place are the small caps, which really have been under a lot of pressure lately. They currently have a score of 43.2. I don't have any short-term charts to show you because we're dealing a lot with the short-term in the daily videos. So all of those charts that I usually show are being used right now. So I have another chart of the fundamentals. This is looking at the S&P 500 longer term on top. And then we look at the earnings. Now, this is earnings that have already been reported and how they've been coming down over the last year or so. We also plot the PE ratio, where that's been going up as the S&P has been going up. And then on the bottom, we have the yield. This is what is the dividend rate for the S&P 500, and it's still pretty low at 1.57%. I look at this periodically just to look at more of the fundamentals of what's happening in the S&P. Intermediate term charts. We were looking at the CMB composite when it was extreme positive. Now it's been dropping down. We've also been watching the Connors RSI when it was extreme positive. Now it's also been dropping. The 50-period moving average, even though we've been declining, we're still far away from that moving average. And the same thing can be said for the 100-period moving average. We've also been far above the moving average tree. If we continue to fall, we'll be watching these 20-period moving averages. But so far, we have about 45 points to go before we even reach that level. I have been showing the short-term rainbow chart. Well, this is the intermediate-term rainbow chart, going from 50 periods up to 100. And we're far away, and the rainbow itself is smoothing out a bit. Then we're looking at the 50-day cycle. We had one end on May 19th. The next cycle will be ending on August 1st, and now we're just kind of bouncing around. Sometimes this has been very helpful over the last year or so. It's marked a bottom. Sometimes it'll mark a top. Other times the market just keeps going and doesn't even seem to mind this. Also, we have a 20-period simple moving average of the open, high, low, close. When we're going up and dropping back, sometimes this will act as support. When we're going down and try to bounce, sometimes this will act as resistance. We're far away right now, so I haven't been including this chart. Then we have a longer term chart going back to the all-time high, and we have an anchored moving average tied to that high. If we really start to fall, sometimes this could offer support. We also have another anchored moving average going back to the COVID low, and then from the pre-COVID high as well. If we start to fall, sometimes these areas will give us some guideposts as to what's happening. Then we also keep an eye on how far above or below are we from the 200-day simple moving average. Then the mass index, which is not generating a signal right now, that only happens when we get above the red dash line and then the blue line and things move in a certain way. And since no signal is being generated, I haven't been bringing that up. Then we look at two things on this chart. On top is equivolume, and when it's green and going up, okay, that's positive. When it's red and going down, that's negative. The more volume that's inside of these bars, the thicker the bars are, so they're trying to bring everything together in one chart. On the bottom, we have the ease of movement indicator, and this measures the path of least resistance. Does the price have a tendency to go up easier or down easier? Well, recently we've been going up, but then we saw some weakness this past week, so the path of least resistance has been more down. This came from a video that I saw online where we mark a parallel line from the lows back in 2022. We draw that parallel line going back to the all-time high, and for a while it looked like we were going to run into this resistance and possibly turn and go down. Well, we've been able to break through that, and I haven't been showing this chart because we're far away from this line. If we do see more weakness, I will start bringing this chart back up. We want to keep an eye on how many stocks in the S&P 500 are above their 50-period simple moving average. We're at 52 right now, so we're just about at the midpoint. Then we look at the mid caps where we're at 47, and the small caps were even a little bit lower, down at 43. Then the Ichimoku cloud. When we're above it and coming down, this might offer support. When we're below it and coming up, it may offer resistance. We're far away from the cloud, so I haven't been including it. All this is a series of moving averages that are then shifted forward, and some people heavily use these as support or resistance levels. Some long-term charts. Here's a long-term rainbow going from 50 periods up to 250 periods. We're far away from all of the lines right now, and they're starting to smooth out a bit, so it's not really telling us all that much. We also have a long-term moving average, which I had been using recently, but not in the past week. 150 periods, we're starting to drop below the midpoint. We're also seeing some weakness with the 200 period moving average. Then I usually show this in the possible positive scenarios section, but this is when interest rates and stocks are going in the opposite direction. Right now, what we've seen is the 2-year yield and the S&P 500 have been going in the same general direction, so this really hasn't given us any kind of a signal lately. Then we also keep an eye on the percent of stocks in the S&P that are above their 200-day simple moving average, and we're just barely above 50 right now. As a general rule, when we're above 50, that's positive. When we're below 50, that's negative. We can also use this as an oscillator to give us an extreme positive or negative reading. Then we keep an eye on the very long-term trend. That's the blue line. This is a 200-week moving average. We're well above that, so the secular bull market trend is still in place. We also have some Fibonacci retracement levels on here, but we're far away from both, so I haven't been including that. A couple of other charts. This is the Vixen, which is the VIX for the NASDAQ 100. I ignore the top chart because of all these hanging down things. I mostly look at the line chart, and it's also suggesting that fear is not very prevalent right now. Then we want to keep an eye on the S&P 100 and how it's performing compared to the S&P 500. It was outperforming earlier in the year where the S&P was going sideways. Now they're moving more or less in lockstep. Then we keep an eye on very small stocks called the micro cap index. It came down and broke below 100 and set a 52-week low. Now we're bouncing back up right now, so I haven't been including that in the videos. Then we also look at a long-term weekly chart of the QQQs. We're above the anchored moving average going back to the all-time high. We're far above that, so there wasn't any need for me to include that. I do look at a couple of rate of change charts just to get a long-term perspective. This is 250 periods, where we have been coming down just slightly, and then going back all the way to 1980. This is also showing a little bit of weakness after it had been showing some improvement. Keeping an eye on bonds. This is something that I just look at, but I usually don't talk about. The green line is the 2-year yield. The red line is the euro dollar, which are dollars outside of the US. And these trade every day, and we get updates on this. And this is a pretty good proxy for the current Fed funds rate. And the green line is typically always on top with the red line on bottom, but we can see the overall direction. The Fed met recently and did not change interest rates, which is why we're not really seeing this shoot up all that much. We also keep an eye on the different yield curves. The ones that I follow are the 10 to the 2-year and the 10 to the 3-month. We are way inverted with both of those. We also watch the 30 to the 5-year, the 10 to the 5-year, and then I don't really watch the 10 to the Fed funds rate because it doesn't update very regularly. We also keep an eye on the 1-month yield and the 3-month yield. They actually went crazy. This was right before the debt ceiling issue was all settled. Now we're back to looking more normal with the red line on top. Then we look at the 1-month yield and subtract the 3-month yield. In a normal world, we should always get a negative answer for that. We are getting a negative answer right now where we were chopping all around right before the whole debt ceiling issue was solved. Thank you. I hope you found this helpful. I hope you use this in addition to the other videos that I post. I hope you're having a very nice weekend, and I will talk to you in the next video.